Is there another? Because there will be four panelists,
Yeah.
and
Okay.
then me.
All right.
So if there's another one. Okay, I think we're going to kick off very soon. So anyone that's joining this session, then please welcome and come and sit down. Got one missing. Okay, everyone. Welcome to this panel on Fintech for Resilience, Investing in Innovation in a Time of Climate Crisis. My name is Juliette Munro. I'm the Director of Digital Economy at FSD Africa, and thanks to those of you who've carried on from our previous interesting discussion on debt and who will stay for our subsequent discussion on democratizing carbon markets. I'm going to invite panelists to join the stage. So if you could just come and take a seat. We do have one panelist that's sitting on a train with a technical fault. So I've asked her to run as fast as she can once she gets here. And so she will join us, and that's Aisha from Farms to You in Nigeria. So she will join us as soon as she can, but we're going to make a start, obviously. We can't wait for her, unfortunately. So just before we start, I just wanted to get a sense of who we've got in the room. Who are investors? So quite a few hands going up. Good. What about entrepreneurs, startups, businesses looking for capital? Okay, another few hands. Great. Any other kinds of organizations, development organizations? Yes. Governments, public sector, policymakers? Great, we've got some of those. So we've got a good mix in the room. Does anyone want to sort of say why they've joined this session? Anyone want to put their hand up and say why they're interested in this particular session? And we can see whether we can sort of meet your needs. I don't know if anyone wants to shout something out. We haven't got time for a microphone. Yes, Fiona. Great. Great, so thank you. That's Fiona who's representing the high-level champions, helping to sort of build up to COP27, which is obviously happening in Africa next month. So there's a lot of work to be done, and so sort of focusing on the resilience angle, which I think is one of the core themes of COP27. Is that right? Thank you very much. Anyone else? Okay. Well, let's kick off. I think what we want to do over the next few minutes is really just sort of explore why and how we want to channel some of the increasing investment that's coming into Africa into climate resilience solutions. I think I was just reading the Catalyst Fund deck last night, which if anyone wants a copy, then we've got Mylise from Catalyst Fund on our panel, who's really sort of done the analysis of the sector and sort of shown that there has been a really booming increased investment in venture building support in Africa over the last 5 years. And there's been real sort of significant year-on-year growth in that area, and more specifically around fintechs as well. And so so that's really encouraging. I think what we want to do, I mean, obviously there are blips in that graph for lots of reasons that we won't go into now. But I think what we want to do is sort of raise some awareness about the need to channel and harness some of that investment into specifically climate resilience solutions that are helping communities and businesses to build their resilience against what is a growing impact of climate change, and really to sort of understand with that the perspectives of startups and what they need, what issues they're facing, what opportunities they're seeing, as well as from investors that are already investing in this space. So we're looking through our panel from the startup perspective. We have got one startup here, and hopefully we will have a second in due course, looking at how their respective models are helping to build resilience and the opportunity that this presents to other African entrepreneurs. And then from the investor perspective, just really understanding what the investment opportunity is and that intersection between finance, but also technology and climate, and how this is coming out as an emerging asset class. So that's really the focus of our discussion. So I'm going to move to the panel. And I think before we kick off with questions, I'd just like you to introduce yourself, perhaps say your name, who you are, and just a couple of words about your organization.
So my name is Toyin Emmanuel Olubake. I work with Novastar Ventures. Novastar is a global VC focused on Africa, and we partner with gritty optimists transforming the African continent, particularly for the many.
Thank you. My name is James Odede. I'm the co-founder and the CTO of Aquarech, which is a startup that's working in the aquaculture space in Kenya. We work with smallholder farmers where we advance them credit in terms of feeds. We also give them pathways to market for their produce. And we also develop technology that allows smallholder fish farmers to improve their productivity, also to take advantage of the market that's available for fish in Kenya. Thank you.
Is this on? Yeah. Hi, everyone. My name is Mylise Cadlaro. I'm the Managing Director of the Catalyst Fund. Catalyst is a pre-seed VC fund and accelerator that invests in early-stage tech startups across Africa that are building the resilience of underserved and climate-vulnerable communities. So far, we've invested in 60 companies over the past 6 years. And we're now intentionally expanding our scope to focus on the intersection of fintech and climate resilience. So in areas like ag tech and regenerative agriculture, aquaculture, fishery management, agroforestry, carbon finance, and a lot more exciting sectors where we see a lot of opportunity. We're also an investor in Aquarech.
Great, thank you. James, I'm going to start with you. I just want to sort of understand a little bit more about how your solution is helping to respond to the sort of climate-related threats that your customers that you serve in Kenya, is how that works. And also perhaps in your response, if you could just say a little bit more about the coming together of both the finance and the technology angles, and how technology is enabling that solution to be delivered.
Thank you. Well, so we work with the smallholder farmers that largely in the fishing communities, but we also go beyond that. So for instance, most of our farmers are based in Lake Victoria on the Kenyan side, where these are communities that largely depended on fishing as a source of income for many years. And due to other factors, including climate change, there's dwindling fish population in the lake. As a result, the communities have lost their source of livelihood and are forced to, to look for other alternatives. And one of those alternatives is going into fish farming. But then fish farming also is not something that is easy to do. A lot of these communities have not done fish farming before. And then what makes it even more challenging is the variations of water temperatures as a result of climate change. A variation, just for context, for instance, farming tilapia, a variation of 1 or 2 degrees makes a lot of difference. And a lot of these farmers are not aware of how to handle that. So the smallholder farmers end up making losses while trying to go into fish farming. So the alternative to that is they're using feeds which are locally made. We call them sinking marsh feeds. Sinking marsh feed, most of the feeds will end up at the bottom of the lake. So meaning they're not consumed by the fish. So there's a lot of wastage, but they're also not good for the environment. They lead to a lot of pollution in the lake. So where we come in is we develop technology that allows these smallholder fish farmers to monitor important parameters like water temperature, to monitor saturated oxygen in the water, to monitor the pH of the water, and then we relay that to our app and advise the farmer the exact amount of feed they need to use and also the intervals of feeding. If you don't do the feeding right, a lot of the feed also go into waste, meaning you're feeding at a time when the fish does not need the feeds. If you look at the cost of fish feed is very high. 80% of your production as a fish farmer, the cost comes from feeds. So any wastage, again, leads to losses. So essentially, the smallholder farmers, before we work with them, they are loss-making. 1, for technical know-how. 2, for lack of tools to respond to the climate-related issues in the water temperature. And 3, also for the lack of access to the right quality of feeds. While we would advise and we encourage the smallholder farmers to go for high-quality feeds, which are they're called floating pellets, meaning they don't sink in the lake, so there's less pollution. And something like tilapia, which is a top feeder, they have access to these feeds, so there's less wastage. Those feeds are not easy to access. They're also very expensive. So that's where credit finance comes in. So we advance credit to these farmers so that they can feed their fish throughout the production cycle. The production cycle can last up to 8 months if they use good quality feeds. For a smallholder farmer, having the cash flow to buy feeds for 8 months continuous is also a challenge. So we come in to address that gap. So the difference that our products make in the farmer's life, the farmer, when they use low quality feeds, which is the sinking marsh, the production cycle can go up to 16 months. When they get high quality feeds, which are environmentally friendly and also have better feed conversion ratio, the production cycle is cut up to 8 months. That's almost half, making these farmers very profitable and also resilient to climate.
Great. So it's a kind of form of precision aquaculture that you're offering to farmers. I think what's sticking with you, James, is could you just say a little bit more? I mean, you talked about extending credit to farmers. Could you say a little bit more about your revenue model and the opportunity that you see for scaling the business?
Yeah. So we take a commission out of the feeds. So we have a platform where we connect the feeds manufactured to the farmers, so we take a commission on that. And also part of our revenue is in the fish buyback. So we've created cold chain facilities across the country where we're able to sell this fish that the farmers harvest. So we do a little bit of value addition on the fish, which is mostly scaling and gutting, and we make our markup on that. So whenever the farmers, our business is interesting because we succeed when the farmer succeeds. At the end of the day, most of our income comes from the selling of the fish. So we need to improve the productivity of the farmers so that we can make more margins. And also talking about the technology, so we have developed an IoT device that measures all these parameters. At the moment, we're not charging the farmer for access to that, but our costs come from the commission. But we also see a possibility or an opportunity to be able to charge this for this device to the farmers later on, and as we expand across the country. So that's our revenue model. Yeah.
Great, thank you. Welcome, our fourth panelist, and thanks for running here.
Thanks.
And so straight to you. Would you like to introduce yourself? Say a little bit more about your business, and perhaps also talk about the climate-related challenges that you're addressing with the solution that you're providing, and how finance and technology is helping with that.
Sure. Yes, morning everyone. My name is Aisha Rahim, co-founder and CEO of Farms2U. At Farms2U, we're building infrastructure to better connect informal demand users to formal supply users. We're starting that with subsistence farming. So working with smallholder farmers to better access finance from banks and also sell their produce to off-takers. The challenge is smallholder farmers, of course, if they walk into a corporate bank, will be asked questions, things like, what is their annual salary, where is their pay slip? These data points are not suited to smallholder farmers, and essentially we're building infrastructure to better help smallholder farmers operate optimally. And once they then receive funding, using our infrastructure, we help them better utilize that funding, ensuring that they have insurance in the instance that things that are unexpected occur, because that happens all the time. My train from Oxford broke down. So even in the most advanced, one of the most advanced economies globally, things still happen not according to plan. Thankfully, got another train, but was still late. If you don't have products that protect you from the unknown, which we know that with the way the climate is going to be increasingly more so that way, in the sense where we have floods in Pakistan, also in Nigeria, where we have operations that have affected our farmers. So more than ever, it's really important to help the informal market, which is a significant percentage of the African economy, better operate. So yeah, that's my introduction. And yeah, it's great to be working with partners like FSD that have that understanding of the challenges that the climate is going. There was a conversation that Maëlys led yesterday where, you know, even though Africa has had the least contributing factor to climate, it's already facing one of the biggest challenges, and that's essentially what our product seeks to achieve.
Great, and can you say a little bit more about your revenue model and the opportunity?
Sure, so revenue model, when we facilitate, through our infrastructure, when we facilitate transactions with the supply side, so for instance, a farmer comes to our platform, needs a loan, when that loan is dispersed from a financial institution, we earn a percentage on the interest that is charged on that loan. When that loan is dispersed, the farmer is using it on our infrastructure to buy seeds, buy fertilizer. Again, we charge a fee on those transactions. And finally, when the farmer gets to production and is selling their produce, again, through the infrastructure, aggregating produce across multiple subsistence farming, giving them the economies of scale to negotiate for a big procurement contract, we then earn a commission on that. So that's our revenue model.
Great, and opportunity for scale?
I think there's significant opportunity for scale. There are a lot more open-minded institutions that are looking to collaborate with organizations like ours in the sense of understanding the challenges. Of course, they can't be as flexible and do the experimentation that we do or having the data points that we get by going onto the farm. So I think that's where the opportunity lies. The affordability of smartphones as well, because our platform our solution is a web-based platform that is accessible via a mobile phone. Again, the affordability of smartphones has really made it really easy to connect and deploy digital solutions to address climate challenges. So I do think there are significant opportunities. I will say that folks should put their money where their mouth is. It's not so much just advocacy, but when you make commitments, we are very aware of the problem. So it's like, how do we move on from that and actually crystallize the opportunities that we see on the ground?
Great, thanks.
Thanks.
Okay, Toyin, you are at Novastar Ventures. You've already started to invest in climate-related innovation. Why? What's the business model that you're seeing? What the opportunity is that you're seeing is presented to you?
Thank you. So why is a good question. Our first two funds didn't have climate as an explicit requirement, but we did see quite a few opportunities that we thought it provided significant value. So I'll give an example of Kumaza, one of the companies that we're invested in, and I think they're the largest forestry company microforestry company in East Africa at the moment. So they work with smallholder farmers to grow eucalyptus. They use technology on a distributed basis. They use technology to manage that and optimize the production. Now, what's happened is that that's an additional revenue stream for smallholder farmers whose revenue is getting under more and more pressure because of different climate-related events. The revenue that comes from the eucalyptus is then additional, significantly additive to the smallholder farmers and giving them more stability and resilience. But then there's also carbon capture that's happening with that production, and so that's also an additional revenue stream. It's bringing the smallholder farmers into the sort of climate resilience activity in a way that they wouldn't be able to do by themselves. And so seeing that, it made great sense as a commercial case, and it also made great sense for the climate. We're now raising a third fund that will explicitly look at climate resilience, climate adaptation, carbon sequestration as well. And so we think that for the African continent, it's really central to livelihoods, especially at the lower and lower middle income levels, where if you're not building in the commercial benefits with activities, you will typically find that there will be a lot of resistance. And what you'll see from like Aquarech and Farms to You is that a lot of times the financing element is actually embedded. It's not fintech in the sense of payments or transfers or wallets or things like that, because you really have to bring that out in the way people operate at that income level. That's the way to really bring the transformation. But we think it's central, not just for the, where the whole world is now, but when you think of food security, energy security for the African continent, we think that it's absolutely essential to start to build in climate resilience right now.
Great, thanks. Same question to you, Mylise.
Thank you. Well, just adding to what Toyin said, for us, tackling the climate crisis was obvious. Like it's not only the urgent crisis of our time, but we were also seeing already from startups in our own portfolio that their customers were suffering from the consequences of changing weather patterns, whether it's farmers or aquaculture farmers, or increasing food prices, disruptions in supply chains, all linked to climate change impacts. And so as an impact investor in this space, we ought to consider what are the opportunities here to build innovation that can actually increase the resilience of those communities. And as a fintech investors for the past 6 years, we also think that there's a big opportunity in fintech being a driver of affordability and accessibility of those solutions among those communities. An example is exactly what James talked about. Right? You embed credit, you make the inputs for fish farmers affordable to them. They can actually improve their own production, and actually something he hasn't said is that their system increases the revenue per fish by 20 cents, right, which actually is massive at scale. And similarly, in the agriculture space, we're seeing a lot of intersections also with fintech, as you were saying, credit is a key input to farmers, but also insurance and savings and other tools. And that's why we decided to focus on this space. In addition, we actually think we're already seeing an increasing demand for those solutions, and I think that's only going to skyrocket. So it's important to be building the foundations today, like as investors, as innovators, and other stakeholders like FSD in the space.
Well, and just a follow-up question there. I think you talked about the interesting models with aquaculture and agriculture and how they're contributing. I just wanted to understand what else you both are seeing in the pipeline. What other types of models beyond agriculture and aquaculture that you're seeing, and perhaps types of models, but also this sort of notion of mitigation versus resilience. Often we think about it as an either/or, and I just wonder whether you're seeing that in the pipeline, or whether you're seeing that there is a sort of more blended outcome opportunity there.
Yeah, great question. It's easy when you think about climate resilience and climate adaptation to only think about the agriculture sector or aquaculture sector, fishery management. But in fact, there's a lot more like in the space. It's very, very vibrant, which is exciting. So we're seeing opportunities, for example, in waste management. We're seeing opportunities in building access to carbon marketplaces so that actually startups like BEM can access income via selling carbon credits. We're also seeing innovation in insurance, whether it be disaster insurance, asset insurance, or insurance marketplaces adding the climate lens to their products, like in partnership with reinsurers. We're also seeing exciting innovations in data plays. So data to, for example, leverage images from satellites to then inform, or rather as an input to the underwriting of credit or insurance products. And also in, for example, the more essential services space, we're seeing innovation in cold chains, cooling solutions, and e-mobility as well, which is more of a mitigation play. So it's quite vast, which makes it exciting. And at the same time, I'm sure investors in the room are like, okay, but what's the focus? And so to your second question, I do think it's not helpful to have such a rigid distinction between resilience and adaptation and mitigation, because often you have both outcomes. Biochar solutions, regenerate the soil. It's a clear adaptation solution to climate change, and you can also sell carbon credits. There's a lot of opportunity in the blue ocean space too. So I do think the outcomes are blended, and we should look at it holistically from both aspects.
Great, thanks. Toyin.
Yeah, no, sorry. In terms of sectors, Maëlys has covered it really well, and we're seeing opportunities in a lot of these same segments as well. But to the point about whether it's adaptation versus resilience, I do think, like Maëlys said, when you look at a lot of the solutions that are scaling on the continent at the moment, they integrate across value chains. Because so much infrastructure has to be built. And so when you start to segment into exactly one thing, from an investor's perspective, even there, you can easily expose yourself to risks that otherwise could be addressed. And a lot of the entrepreneurs that are building are seeing this. So they're saying, okay, we're not just going to build something that's doing this one thing. Aisha is not just saying, okay, well, we're going to build the infrastructure and work with other people who are doing the connections. She's working across the value chain. Same thing with what James is doing. James is not just saying we're going to do the feed. He's working across the value chain. And so I think that sort of expansive view is, I think, necessary for the continent, given where things are. And where you see both on the entrepreneurial and investor side, things like that happening, you do see scale going through a lot more quickly and a lot more sustainably as well.
Great, thanks. And actually in the next session on carbon markets, I think we're going to talk a little bit about the blend of mitigation and resilience in some of the sort of carbon market innovation that's starting to happen. So just, Aisha, I just want to sort of, as I said at the beginning, we've got an increased flow of capital into Africa for fintech, but we just, it's still not enough, particularly private capital. I just wonder from the startup perspective, what challenges you've experienced in trying to raise capital for Farms to You?
Yes, of course. The challenges in the sense of folks not understanding the infrastructure challenges, which Mylis and Toyin just covered very clearly, in the sense where some of the feedback we got, for instance, when we're at the Techstars Accelerator in the US last quarter, who was our first external investor, were things like focus. You need to do one thing, but that doesn't apply to the sub-Saharan Africa sector. So I think the misunderstanding sometimes creates a challenge. I think also in the sense where fintech has, so for instance, if I have my stats right, more than 70% of the actual funding that has been dispersed in sub-Saharan Africa has gone to fintech. Finance alone can't solve the problem, so it's also about thinking about how finance can be embedded into the industries like agriculture, like construction, manufacturing, that can actually drive change. I mean, personally for me, this is my first venture. Being female, in terms of most of the meetings I go to, I am the only person that looks like me. So sometimes that creates a barrier, but it's just about navigating it. I think the tide is changing, but it can change a lot faster. So yeah, those are some of the challenges I've personally experienced.
Great. James, what about you?
We've had some challenges raising funds, specifically related to aquaculture. It's a very new space. Investors tend to want to put money in sectors that they understand. So we're just seeing most of the investors we're talking to would say we're looking into aquaculture, they're doing the research. So there's not enough data out there. As much as the opportunity is clear. So for instance, in the case of Kenya, the amount of tilapia we import from China is about 200 million a month. And the government's reason for that is there's not enough local production. So even if we just find a way of transferring that money in the hands of smallholder farmers, is enough opportunity for growth. But we don't have enough substantive publications on the market value of tilapia or fish farming in Africa that can inform investors to make decisions. So I think that's one of the challenges we've seen. We've often had to educate our potential investors in the sector and make a case for investment. The same applies to investment in with the lens of climate change and climate resilience, where the model needs to be a bit more holistic. You cannot just do one thing to the farmer. There needs to be a lot more of a value chain approach. And like Aisha said, some investors would, for lack of maybe knowledge in the sector, would say maybe you're doing too much, but it needs to be a very holistic approach to the sector to have that angle of the resilience. So I think those are the things that I think need to change to make our work easier. But of course, we've had good enough support from Catalyst Fund and some of the partners that we're working with, who champion investment in the sector.
Great, thanks, and we'll pick up on that just now. But Toyin, I just wanted to ask, I mean, you've already committed, you've already made that decision to invest in this space. So how can we help to increase the investment flows into this emerging asset class?
Be an LP. I mean, no, I think to James's point as well, actually, there's, I think, a lot of education that can still be done about the context on the continent to help people understand the sort of strategies that investment managers will be coming with, which is, again, based on how entrepreneurs are responding to the situation on ground. So it kind of flows all the way through, and that's why conversations like this are quite important, because, there's the way climate change is being tackled in different parts of the world, and the way it's being felt and responded to is going to be quite different in the near future to midterm from how it's been felt and responded to on the continent, and so on the African continent, of course. So I think the better people can understand that, the better people can then support that, and that's something that's quite important. But then, seriously, like Aisha said as well, going beyond sort of the conversations and the learnings to participation, whether it's through investments or through whatever other sort of means that people are best suited to do, I think it's absolutely critical as well. Yeah. And we're looking forward to the COP27 that will be happening next month, I think.
Next month, yes. Mylise, would you like to?
I completely agree with Toyin. I think it definitely has to start with learning, education, and doing that collaboratively. And I think there's some initiatives now in the market that are trying to promote the greater understanding of what this asset class is, what the opportunity is, what returns could look like, how to measure impact. That's the huge topic that we probably won't even have time to really tackle in the panel today. And one such initiative is called the CFAR Alliance. And it's an alliance of stakeholders, from investors to innovators to public sector organizations, researchers, that comes together to understand specifically actually the role of digital finance in enabling climate resilience. And we kind of learn together, map the opportunity space, have created investment thesis briefs to disseminate this knowledge. But in addition, when it comes to action, I think the reality is that a lot of these models will need more time to prove themselves, will need more time to scale. And value chain approaches, when you're asking a startup to solve so many challenges and not focus on one product, of course, like, the magnitude of the challenge just requires that longer term horizon. And I think a lot of funds, especially traditional VC funds, are not set up for those horizons. And we're asking startups to return capital 2-3 years time horizons, and with crazy sort of multiples that we see in markets in the US and Europe. I do think we need to rethink the way that finance is provided to some of these models, in thinking, for example, about blending capital, about innovative structures, aligning incentives. There's a lot, I think, in the carbon finance world that is actually offering that innovation as well. And bringing more stakeholders to the table. Like, it can't be left to just development finance institutions. How do we attract private capital into innovative finance structures that are fit for the type of models that we're seeing on the grounds that are having an impact? I think this is a key question that, as a community, we have to answer.
Yeah, good. And we're sort of still thinking about that broader ecosystem. I guess a question for you, James, is you obviously want to attract capital into your business and continue to do so, but what other forms of investment would you say that you need in order for your business to be successful? So not directly coming into your business, but just in that broader ecosystem. Where else do you think capital is needed to nurture that ecosystem so that you can thrive?
Yes, this need for investment in research so that can guide investors while they make their decision, and investment in bodies that collectively want to achieve the same results in terms of investing in climate resilience, and also how to bring traditional financial institutions into the space. For instance, in our case, we are still offering credit out of our balance sheet because the FIs are still very reluctant to come into lending into aquaculture. So if there's opportunities for financing the traditional investors or the traditional financing institution to come into play, and obviously we're using data to make our decisions, but these are data that the traditional banking institution will not accept. So for instance, in our case, the farmers record their farming practices. We have information about their stocking density. We have information about when they're going to harvest. We have information about the population of their fish in their fish ponds and fish cages. Can that information be used to advance credit to the farmers? So investments in that element will really help boost the sector for us.
Great. Aisha, anything to add there?
Sure. Just following on that last point that you made about the data and how banks don't accept it. I mean, it will be very hard to imagine a world where credit cards could operate without Equifax or all these other institutions that do credit scoring. So I think there is a huge role in building infrastructure on the ground and actually defining ecosystem players. So for instance, the challenge of data, a lot of companies of our size actually have to work on the ground and build out more useful data points, because at the high level, it's not very useful in terms of analytics and trying to make accurate decisions. So I think infrastructure in the sense of building central data structures that can be used across board at industry level. I think there's also the opportunity as well. We've seen the improvement in telecommunications and how that has scaled things like M-Pesa. M-Pesa wouldn't have scaled if you didn't have GSM communication. So replicating that in 5G internet and also things like road networks, it increases the deliverability of goods when transporting. So I think these are some of the things that we need within the ecosystem to help drive it. I do think the approach that we're taking, Aquarech and FarmStew, in terms of building an infrastructure across the value chain is really helping to crystallize such a movement, because we are looking across the value chain. And if you can then replicate that on the ground in terms of when you have better roads, you don't actually need to pay so much attention on the driver, because you can literally just predict that, okay, he's left Machakos, Kenya today, he'll get to Nairobi in 24 hours. But with bad roads, you don't know. It could be a hit or miss. So I think infrastructure, better data will help increase predictability, introduce automation, which would help just increase efficiency as well.
Yeah, I also just wanted to add something that I think is essential for the ecosystem, which is the democratization of the benefits from carbon credits. I think that for the African continent in particular, the reality is that at scale, resilience, adaptation will not be built because of the climate need at scale. I mean, there are obviously, governments and so on that will drive that, but at scale, if the economic benefits do not come through to the average person, they won't be incentivized. So that's actually something that is absolutely critical across board. And so where that can be democratized, and then fintech plays a big role in that, obviously, because we're talking about economic flows. That's something that at Novastar we think will be absolutely critical to seeing this scale across the continent.
Well, again, Toyin, thanks. That's another plug for the next panel. And I can see all the panelists coming together for that. So thanks for that. So just a last question before we open it up for Q&A. I mean, we started the session talking about the fact that COP27 is happening next month. It's really very close. And so I just wanted to ask the panelists if you had any key messages. I mean, there's going to be the nations coming together to review how they've performed so far against their targets, and there's going to be a whole new slew of new commitments that are going to be made next month in Sharm el Sheikh. So what's your message to the policymakers, to the surrounding investment community that are going to be watching those conversations with interest?
Sure. This is quite personal to me, because after COP26, we saw so many articles of nations, I won't name names, taking back channels and saying that, okay, downplay these problems, and are already backtracking on their commitments within less than a week of the COP26 summit. It shouldn't be a media parade of just talking and making commitments that people don't stick to, because we can see the increased negative impact of rains. Pakistan has lost so much in terms of produce, and that is going to impact every single person, as we've seen how Russia, Ukraine is affecting food prices and fertilizer prices, and these things will keep getting worse. So these summits, at the very least, if the leaders can't be held accountable or actually live up to their promises, then we're kind of wasting our times. I think people just need to be more, it's not CSR for PR. It's a real problem that is not going to go away until we actually take action. So my message is, make a commitment, stick to that commitment, and it can be as little or as much as you can do, but at least something that you can commit to, because that would send a message to everybody else to take a small step towards a more climate secure future.
Very well said, Aisha. I think my message is very similar. I think there's no time to waste. We're truly in a race to build resilience and adaptation because under all climate scenarios, we're not going to be able to actually probably reach the target of mitigation that will avoid some of the consequences. And today, only 6% of total financing for global climate action is going to adaptation and resilience. This is a ridiculous amount because we need actually probably north of 350 billion to make a difference. And I'm excited to actually work with other investors to bring more capital into the space from everyone. It's the public sector, it's the private sector, it's us also as individuals. We all can play a role and we should.
Yeah, I agree that there need to be more financing flowing into climate resilience and adaptation. It's good that COP27 is happening in Africa. I think we have a chance to make all the efforts of resilience and adaptation contextual for the African continent. And like Theo said, there needs to be a better understanding of how a common person in Africa can play a role on climate adaptation and resilience. And if it's going to make their lives more difficult, even in the short term, there will be very limited, very few people will embrace that. So how can we look at the economic opportunity that comes with climate resilience and climate adaptation work in Africa to incentivize more people to, to play a role? I still believe if it's too expensive an approach, very few people will be on board. So how to contextualize all this work for the continent of Africa should be one of the focus of COP27, I think.
I'm probably going to echo exactly what's been said in different words, but I would say rapid deployment through existing commercial ecosystem actors. And I put it that way because, the commitments are there. We need the deployments to speed up, as has been said. And with the sort of nations, institutions that usually drive these sort of engagements, I say through existing commercial ecosystem actors because you would usually see a commitment to start a new thing. And there's a place for new things to be done, but there's also a place for existing actors, whether it's entrepreneurs, investors, to be enabled to actually pick up the pace, really. It's as simple as that. And it's not to say deploy all the capital. Again, it's an ecosystem. We're talking value chains. But we think that urgency should be expressed. Yeah.
Great responses. Thanks, everyone. We've just got a few minutes for Q&A. So I don't know whether anything's come through Slido, Angela, but I saw a hand going up there. So perhaps if you'd like to ask a question while we look at what else has come up.
Yeah, sure. I did actually post on Slido. We talk about climate investments. We talk about more time required to develop models in agriculture, for example. The question is there such a thing as patient capital? And if there is, where does one go? And where do we ask for it or apply for it, even in greenfield or brownfield projects?
Who would like to take that one?
Good question. I think the answer is there isn't enough patient capital, but there definitely are organizations that are extending it. So whether there's grants in the system, but I think the limitation around grants that it often comes with, unless it's some specific institution, but with strings attached and long sort of application cycles. So for entrepreneurs, it's often hard to access that world. We help certainly our entrepreneurs at the Catalyst Fund map out what the opportunities are. And there's organizations that really have dedicated their decades to building the space. Climate Kick is an example. They have several programs across emerging markets building up basically the climate venture space. And then there's also impact investors. There's a number of them. And I think I would say Novastar Ventures, Catalyst Fund, and others qualify as such that do take longer-term horizons and work with their LPs to have the appropriate structures to extend patient capital to the startups that we work with. Yet, obviously with a view towards still creating viable solutions that have that potential for scale and impact. So it's nascent, but I think there are certainly a few players to look for and to look at. And I'm happy to give you a full list later.
Are you Lance? Yes. Okay, good. So we've answered your question, I hope. But there was another question that was quite similar, but specifically around aquaculture. And I don't know, James, whether there are any specific investors that you're seeing that have the patience, because aquaculture does take time to develop, that has the patience to enable that to happen. Yeah, just wanted to know if you wanted to add something there.
Yeah, like Miley said, there are players in the space of impact investors, and it depends how patient the capital is. I think it varies for different spaces. Yes, but we've, for instance, we've gotten a really well-structured loan from Rabobank Foundation, who have been able to model the lending based on our farmers cycle. So I think that was one of the good examples that I can say about patient capital. But there's definitely need for more players to come into this space. Yeah.
Great.
Yeah, just to add, to echo that and then add something. Yes, there is patient capital, but I would say that, like Miley said, there's not enough patient capital, and even for a lot of the patient capital, there are constraints that it's not patient enough yet. When you think of the typical fund model, especially commercial fund, you have a 10-year life, typically 5 years to deploy, 5 years to exit. So if you make an investment at the beginning of the fund, you've got 10 years. But here we're talking about businesses that are building across an entire value chain. Those sort of fund designs were for economies where you're typically playing in one part of the value chain, and you still need 3 to 5 years to sort of scale across it. And so there is a big case that I know a lot of fund managers are making with, let's say, very slow success to kind of see funds that have longer periods so that these companies that are doing a lot more than their counterparts are in other environments can really, entrepreneurs that are doing a lot more than their counterparts are in other environments can really sort of build enough value that, the exits people talk about then become easier to realize.
Great, thanks. There is another question. Simon Davis. Yes, I hope I paraphrase. Oh, you can say your question directly. Yeah, great.
I think it taps into what was just said. So Aisha said about how she was encouraged to focus on one thing. Like climate tech is by definition new and also requires you to span boundaries. But investors like neat boxes, it fits into this vertical or that whatever. How do entrepreneurs, how do we pitch to investors in a way that kind of meets what their language, but also doesn't just narrow our scope to the extent that it doesn't work on the continent or to be truly resilient?
Yeah, really good question, Aisha. I think that's one for you. You're in the middle of raising at the moment.
Yes, sure. I'll definitely take that one on board. So, again, going back to advice that I would receive, folks would be like, why don't you tailor the pitch to who you're speaking with? And for me, I feel like that might be a misrepresentation. So my approach has been to be very, transparent in how extensive our model goes into, because we're supporting farmers with finance. We're also working with input providers, but also taking on feedback. Investors have at least talking from my experience with Techstars, because it was a very great program. I had very great mentors and investors that came in as angels. And from their perspective, things like that they'll say to me is, explain to me, why do you have to do inputs after giving finance to farmers? And it's like, we don't really have a credit system like you have in the US. So just trying to contextualize why you have to take certain steps, and that increases the scope of the work you're doing. It does mean you have to speak to a lot more investors, because some people just don't get it. And like you say, folks want to look at your deck and be like, okay, it's in this exact same structure, problem, solution, all the rest of it. And they're like, okay, put this in this bucket, that bucket. It just helps their brain process more. Folks don't want to leave their comfort zone to think outside the box. But for me, I don't try to look at that as a challenge, because if you think about Airbnb a couple of years ago, a stranger sleeping on your couch would have sounded crazy a decade ago, but now it isn't. So I think it's just knowing that some folks would get it and most folks wouldn't get it. So just trying to find that person that understands what you're doing, and they will become your evangelist if you explain it to them in a very clear way, I think.
Yeah, great. James, I don't know if you've got anything to respond to that as well.
Yeah, so at the end of the day, most of the capital will come from investors that are also looking for value. Yeah, they might be inclined to make a contribution in the climate resilience and adaptation, but some things still remain the same. So it's important that you get your business model right in a way that you can, communicate this in the most simple, in the simplest way possible. I think that's what has worked for us to, really focus on communicating clearly the business model before we go into the jargon of fish farming, which can be very technical. Yeah.
Great. Thank you very much. Well, we've got no more questions on Slido. So on that note, and we're pretty much dead on time, so that's good. I'd like to invite you to give a big round of applause to our panelists, who I hope you've enjoyed this conversation. Thank you very much. Lovely. So the next panel